Side hustles have become more than a trend. They're now a permanent part of the modern economy. Whether you're freelancing on weekends, selling digital products from your laptop, renting out a spare room, or creating content that finally brings in real income. But as money begins to flow in from something that isn't your traditional job, taxes follow right behind it. The thrill of earning extra cash can quickly turn into confusion once you realize the IRS considers you a business now, even if you don't feel like one. Yet here's the twist. Once the government sees you as a business, you also gain access to powerful tax advantages that ordinary employees simply don't get. There are so many year-end opportunities that can legally reduce your tax bill, but most side hustlers miss them because no one ever taught them how this system works. Consider December 31st your finish line. Everything you do before midnight counts toward lowering the taxes you will owe in April. Everything you don't do becomes a donation back to the government. The truth is, side hustlers have a unique path to keep more of what they earn, and once you understand how the rules are written, you can use them in your favor. The first mindset shift is realizing that your side hustle isn't just a hobby once money touches your bank account. You are now operating a business even if you only made a few $100s this year. That means your taxable income is not based on what you earned. It's based on profit, and profit is simply the money left after subtracting legitimate business expenses. Too many new entrepreneurs assume they owe taxes on the full amount they bring in. They forget that every purchase that supports the hustle can potentially offset income. That includes everyday items you never thought of as deductions. The phone you use to manage clients, the monthly internet bill you rely on to upload orders, the software that helps you edit videos or manage invoices, even a portion of your housing costs if you regularly work from a home office. But one of the biggest year-end secrets lies in timing. If you know you will owe taxes because you had a successful year, you can invest in your business before December 31st and legally reduce what the government considers profit. Say you are a freelance photographer. You may plan to buy a new lens early next year, but if you purchase it just a few days sooner and start using it immediately, that expense hits this year's books, lowering the income the IRS taxes. The same applies to creators needing new lighting equipment, fitness coaches needing upgraded training tools, tutors purchasing educational resources, virtual assistants buying project management software, or anyone who simply needs better equipment to grow. Even if you don't want to splash out all at once, smaller recurring expenses matter too. Subscription platforms you rely on count as deductions as long as their primary purpose relates to your business. Those payments add up fast. When the calendar flips into January, that window closes. The government rewards those who run their small business with intention instead of accident. Those who plan in December win in April. The next tax advantage many side hustlers overlook is mileage. If you drive for your work, dropping off products at the post office, traveling to meet clients, visiting properties, attending networking events, the distance you travel isn't just a chore, it's money. Yet most gig workers forget to record their miles, and unrecorded miles become lost deductions. A side hustler who drives 5 or 10 miles a day on work-related errands can unlock hundreds, sometimes thousands of dollars in tax savings. This is why rideshare drivers and delivery workers who stay organized often keep far more of their earnings than those who rely on guesswork come April. Year-end is the perfect time to catch up and rebuild that mileage log while memories are still fresh. Another tax hack hiding in plain sight is the home office deduction. Many people assume they can't claim it because they occasionally use the space for personal activities. But the rule isn't about perfection, it's about intention and regularity. If you have a space in your house, a corner of a bedroom, a dedicated desk area, even a tiny nook equipped specifically for work, and you use it consistently for your side hustle, then that space earns a deduction. This isn't just a little bonus. It opens the door to writing off a percentage of rent or mortgage interest, utilities, electricity, repairs and maintenance, and even a portion of cleaning costs. It rewards the effort of creating a professional environment, even if that professional environment sits 10 feet from where your dog naps in the afternoon. There's also a strategy that people with children often never consider: hiring their kids to help. It may sound strange, but it's completely legal and highly beneficial when done correctly. If your child genuinely performs tasks for the business, such as packing orders, cleaning equipment, helping with product organization, or even appearing in marketing photos, you can pay them a reasonable wage for age-appropriate work. That money becomes a deductible business expense, lowering your taxes. Meanwhile, your child receives income likely taxed at a far lower rate than your own. Instead of giving them an allowance that has no tax advantages, you turn that payment into a benefit for everyone involved. The key is tracking the work, documenting the hours, and paying through a real business process before year end. For those earning more significant income, retirement contributions open yet another door. Traditional employees depend on their companies to offer options like 401k plans. Side hustlers don't have that luxury. They get something even better. A particular type of retirement vehicle, known as a SEPIRA, allows self-employed individuals to contribute a percentage of their net earnings while reducing taxable income in the same year. The more your business earns, the more room you have to save, and the government incentivizes this by lowering what you owe. The magical part is that you have until tax time to finalize the contribution, but the earlier you start planning, the easier it is to take full advantage. Thinking ahead in December helps you maximize the opportunity instead of scrambling once the deadline arrives. Healthcare expenses also turn into tax-smart opportunities depending on how your business revenue is structured. The government lets self-employed individuals deduct health insurance premiums in many situations, including coverage for spouses and dependents. Something most people already pay for transforms into a powerful tax reduction simply because they took the leap into business ownership. These are the rewards that come with building something of your own. All of this leads to the final and perhaps most important year-end tax hack: keeping records. The law does not expect side hustlers to be accountants. It simply expects evidence. The side hustler who wins is the one who takes 30 seconds to snap pictures of receipts, organizes bank statements, copies invoices, and reviews transactions before the year ends. Clarity turns chaos into savings. Once January arrives, the chance to remember forgotten deductions fades quickly. Tax season feels stressful only for those who leave everything until the deadline. For the prepared, it becomes a simple exercise of confirming deductions already tracked. The beauty of all these opportunities is that they don't require loopholes or trickery. They are written into the tax code on purpose because societies thrive when more people participate in entrepreneurship. Everyone with a side hustle, no matter how small, becomes part of that engine. The government recognizes the risk and effort required to create income independently, which is why the rewards are so accessible. Those who understand these rules early rewrite their financial story long before their business becomes big. So as the final weeks of the year unfold, imagine what April could feel like if you treated your side hustle like the business it truly is. Imagine knowing that every dollar you saved through smart tax planning helped build your growth instead of disappearing into a system that never met you personally. The calendar will flip soon, and the decisions you make before that moment determine whether the season ahead brings relief or regret. Side hustles are about freedom. They're about taking control of your financial destiny, using creativity to shape income on your own terms. Smart tax decisions reinforce that freedom. They protect your gains. They ensure your effort is rewarded, and once you see how much power you actually have, you'll never look at December the same way again. That was all from us today for this video. For more similar content, make sure to watch our last video on 3 stocks and 2 side hustles that could explode in 2026. See you in the next one.